Hey everyone, Intel Corporation is scheduled to report fiscal year 2024 second quarter earnings results after the markets close on August 1st. So I'll preview what investors should be looking for from Intel in that upcoming quarterly earnings release. I'll highlight the big picture items that are not going to be widely presented when you look at stock market news. They're going to mostly talk about revenue and earnings per share. They don't go into very much detail into the critical items that lead to those increases in revenue and earnings per share. That's what I'll highlight in this video. I'll also update my recommendation for Intel stock. I'll let you know what I think about it, whether it's a buy, hold, or a sell, and whether or not you should buy before or after earnings, or if that matters. So I'll do all of that in this brief video. So let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so in its latest quarter, Intel reported revenue of $12.7 billion, which was up 9% year over year. The difficulty Intel's been having is with profitability. That was negative 9 cents per share. Intel's been investing and restructuring the business, changing the way it operates, right? It's now building out the Foundry business, where it will be manufacturing semiconductor chips for third-party companies. Instead of just manufacturing Intel-branded chips, it will now be manufacturing other brand chips. And interestingly, that's something I'm going to dig a little bit deeper into a little later in the video. Now, for the second quarter, Intel is forecasting revenue of $13 billion at the midpoint, and second quarter earnings per share that will be negative again, but just 5 cents instead of 9 cents. So it's improving. All right, so management saying that with Intel 3 in high volume production, leading edge semiconductors are being manufactured in the US for the first time in almost a decade. And we are on track to regain process leadership next year as we grow Intel Foundry. We are confident in our plans to drive growth throughout the year as we accelerate our AI solutions. So let's take this one at a time here. First of all, manufacturing semiconductors in the US. That's becoming an ever-increasing thing in importance, right? You've seen in the last week or two political rhetoric coming from the Biden administration and Donald Trump, the potential president, as they've highlighted they want more production in the United States of these critical components. And that's why you've seen this bit of a reversal, right? You've had these companies like NVIDIA and AMD and Taiwan Semiconductor Manufacturing that have been thriving so far in 2024. They kind of took a hit because of those political comments. But Intel has done relatively well in these last couple of weeks because Intel is a US-based manufacturer. And if there is a big reversal in the manufacturing location, that's going to benefit Intel. Because if companies like NVIDIA, I'm not saying they're going to do this, but if they are forced to change manufacturers from Taiwan Semiconductor to Intel, that would be a massive boost to Intel. Massive boost. And so even if the probability is small, but that probability is increasing that NVIDIA and AMD might need to, just as backup, just as insurance, start working with Intel, giving Intel some portion of their manufacturing, right? Because NVIDIA and AMD and many other companies, they outsource their manufacturing. But most notably, Taiwan Semiconductor is the big player in that area. Intel, not quite there yet. Now, with these investments in the Foundry, it could grow to gain some market share in that segment. Looking ahead, they expect to deliver year-over-year revenue growth and non-GAAP EPS growth in fiscal year 2024, including 200 basis points of full-year gross profit margin improvement. So they've been investing and accelerating those investments in 2022 and 2023, and also in 2024. Management has said, though, that 2024 will be the peak, and they'll start to benefit from those investments starting in 2025. But already it looks like they're benefiting in 2024 with the gross profit margin improvement. Now, I've highlighted here their research and development spending, $5.9 billion in the first quarter of 2024. And that's a large percentage when you think about they generated $12.7 billion in revenue. So almost 50% of revenue they're spending in research and development. So like I mentioned, they're really investing aggressively. And that's been one of the takeaways or downsides of an Intel. Investors have not been happy, if you look back at the last 10 years, at how Intel failed to invest in research and development, failed to invest in cutting-edge technology, and that left the company behind. And now they're trying to catch up. They're trying to be the most innovative foundry semiconductor manufacturer. And so these investments will help. Also, Intel is getting billions of dollars from the US government to help facilitate these investments in expanding manufacturing in the United States. So the timing worked out really well for Intel. Right. So another thing to look out for from Intel is the personal computer industry. Right. Artificial intelligence has been starting to work its way into personal computers, and Intel expects to exceed its prior forecast of 40 million AI PCs sold by the end of 2024. And the replacement cycle in personal computers, that's going to fuel growth in this industry from 2024, probably through 2027, but the peak years are going to be 2025 and 2026. That's when all of the computers that were purchased in 2020 and 2021, the vast majority of them will get replaced over these next 2 to 4 years, and Intel is in a great position to benefit from that trend. So I want to see what management has to say about this when they report their quarterly earnings results. Also, at Intel Vision, the company introduced the Intel Gaudi 3 AI Accelerator, which is projected to deliver on average 50% faster inference and 40% greater inference power efficiency compared to the NVIDIA H100 chip for generative AI models. So Intel is entering into the space competing with NVIDIA for artificial intelligence for the data center. And this Gaudi 3 compared well with the H100, but NVIDIA is now shipping and installing the Blackwell technology, the next generation. So they're beyond the H100 already, and they've already announced the next generation to the Blackwell even. So NVIDIA is jumping ahead already with their technology. It's good to see Intel coming in here. So I want to hear from management how this product is playing out. What's the ramp looking like? What are customer orders looking like? Do they have a next generation to the Intel 3 Gaudi AI Accelerator? Are they already investing in the successor to this technology? So I'm curious to hear more about that, and that's going to play a big role to the investor reaction to Intel's quarterly earnings release. Now, Intel is trading at a forward price to earnings of 17.05, and that comes on the back of roughly 10% increases since the 1st of July. It's now at $33 per share, up from around $30 per share to begin the month. So I like Intel at current valuations. I like its prospects going forward over the next 2 years, but also over the next 5 years and over the next 10 years. The geopolitical tensions are working in Intel's favor. So if you want to hedge against some of that geopolitical risk with China, potentially with their conflicts with Taiwan, if you want to hedge some of that risk, Intel is one that will benefit with those increasing risks because they are a potential manufacturer that NVIDIA, AMD, and others can use to outsource their manufacturing. So I like this stock. I like the valuation. Now, whether or not to buy before or after earnings, I don't think it's cheap enough where you feel like you need to buy before earnings. I also don't think it's so expensive that you need to wait until the earnings come out to make a decision. I think you can buy before earnings because the valuation is cheap enough. But to lower those risks, you can split your purchase in several smaller pieces and buy some before earnings and buy some after earnings. But overall, I think the stock is undervalued and I have Intel stock rated as a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.